The semiconductor industry remains strong, driven by the adoption of artificial intelligence across an expanding applications space. Furthermore, major innovations will be required to address AI's power consumption and cost challenges, and we believe that lithography will remain at the core of our customers' innovation. We anticipate an increased number of critical lithography exposures that will be required for advanced logic and memory processes. Our flexible and versatile portfolio is well positioned to address all customer needs as we extend holistic lithography to support 3D integration, improve DUV and EUV performance and cost-effectiveness, and scale EUV technology well into the next decade. ASML values the strong industry partnerships that are critical to our success and our collective commitment to a leadership position in ESG. We also expect to continue to return significant amounts of cash to our shareholders through growing dividends and share buybacks. At our next Capital Markets Day on June 10, 2027, we will update our longer-term views, reflecting the market and technology dynamics since our last Capital Markets Day. This slide highlights that High-NA EUV has reached a new readiness milestone with its first high-volume logic product. This milestone reflects close technical collaboration between Intel and ASML, demonstrating how High-NA EUV can be integrated into advanced semiconductor manufacturing. By qualifying the High-NA EUV process option on Intel 18A product layers, their existing fleet of tools is already providing customers with increased output, while also developing future options for leading-edge performance, density, and manufacturing flexibility on upcoming nodes. This achievement represents a significant step forward in the technological advancement and future competitiveness of the semiconductor industry. Let's review the Q2 2026 results summary. Total net sales reached €9.3 billion, with net system sales contributing €6.6 billion and installed base management sales accounting for €2.8 billion. Notably, the gross margin stands at a strong 54%, indicating robust profitability from core operations. The operating margin is 37.1%, reflecting the company's operational efficiency. Furthermore, net income as a percentage of total net sales is 31.3%, and the basic earnings per share are €7.59. These figures collectively demonstrate the company's solid financial performance and effective management during the quarter. This slide provides a detailed comparison of system sales performance between Q1 and Q2 of 2026, examining changes in sales proportions. Firstly, total system sales in Q2 2026 reached €6.6 billion, an increase from €6.3 billion in the previous quarter. Looking at the technology breakdown, the proportion of EUV equipment significantly expanded from 57% to 66%, while AR-Fi decreased from 29% to 23%, indicating the growing importance of EUV technology. By end use, the proportions for logic and memory semiconductors remained nearly constant at 51% and 49% respectively. Geographically, Taiwan and South Korea continue to be major contributors, accounting for 30% and 43% of total sales, followed by China at 14% and the USA at 9%. It is noteworthy that South Korea's market share saw a slight increase from Q1 to Q2. Finally, examining the sales units for lithography equipment, EUV remained stable at 16 units, while AR-Fi saw a decrease from 23 to 17 units. However, KrF increased from 35 to 30 units, and I-line rose from 9 to 11 units. These changes in sales volume are closely related to shifts in market technology preference, and it is important to observe the changes in other technologies alongside the consistent demand for EUV equipment. This slide presents a breakdown of ASML's total net sales by end use over the years. We observe a consistent upward trend in sales, starting from €21.2 billion in 2022 and projected to reach €32.7 billion in 2025. Notably, the logic segment shows the most significant growth, increasing from €10.0 billion in 2022 to €16.1 billion in 2025, indicating a rising demand for logic chips, which are central to the semiconductor industry. The memory segment also demonstrates robust growth, from €5.5 billion in 2022 to €8.4 billion in 2025. The installed base management segment, which includes net service and field option sales, is projected at €8.2 billion for 2025. Looking at the forecast for the first half of 2026, total sales are estimated at €18.1 billion, reflecting a decrease in the logic segment, a stabilization in the memory segment, and continued growth in installed base management. This data highlights the volatility of the semiconductor market and potential shifts in ASML's business portfolio. Let's examine ASML's shareholder return policy. In Q2 2026, ASML paid a final dividend of €2.70 per ordinary share. Considering the 3 interim dividends paid in 2025 and 2026, along with the final dividend, the total dividend for the year 2025 amounted to €7.50 per ordinary share. Furthermore, the first quarterly interim dividend for 2026 is set at €1.88 per ordinary share and will be payable on August 5, 2026. Additionally, in Q2 2026, ASML purchased approximately 0.8 million shares for a total of around €1.1 billion. The bar chart on the left illustrates the trend of annual dividends per share. Starting from €1.40 in 2017, it has steadily increased, reaching €7.50 in 2025, with an additional interim dividend of €1.88 expected in 2026. The cumulative cash return graph on the right shows how shareholder returns have grown over time. Through dividend payments and share buybacks, cumulative cash returns have consistently increased from 2017 through Q2 2026, indicating ASML's commitment to enhancing shareholder value. The slide before you presents the outlook for the third quarter and the full year of 2026. For Q3 2026, total net sales are projected to be between €11.0 billion and €12.0 billion, with installed base management sales contributing around €2.9 billion. The gross margin is expected to range between 55% and 57%, R&D costs around €1.2 billion, and SG&A costs around €0.4 billion. Looking at the full fiscal year 2026, total net sales are anticipated to fall between €43 billion and €45 billion, with a gross margin between 54% and 56%. The annualized effective tax rate is projected to be around 17%. These figures will serve as a crucial reference for future investment decisions. This slide presents the consolidated statements of operations summarizing ASML's quarterly financial performance. We can observe the trends in sales, profits, and earnings per share from Q2 2025 to Q2 2026. Firstly, looking at total net sales, it started at €7,692 million in Q2 2025, increased to €9,718 million in Q4 2025, then slightly decreased to €8,767 million in Q1 2026, before recovering to €9,326 million in Q2 2026. This fluctuation can be interpreted as a reflection of the cyclical nature of the semiconductor equipment market. Notably, the gross margin percentage, after a slight dip from 53.7% in Q2 2025 to 53.0% in Q1 2026, improved to 54% in Q2 2026, demonstrating their success in defending profitability. Income from operations steadily grew from €2,664 million in Q2 2025 to €3,158 million in Q1 2026, and further rose to €3,456 million in Q2 2026, indicating robust operational performance. Net income followed a similar upward trend, increasing from €2,290 million in Q2 2025 to €2,918 million in Q2 2026, a growth of approximately 27.4%. Earnings per share, or EPS, also shows an overall upward trajectory, with basic EPS significantly growing from €5.90 in Q2 2025 to €7.59 in Q2 2026. Lastly, the sale of lithography systems in units is noteworthy, increasing slightly from 76 units in Q2 2025 to 79 units in Q1 2026, and then significantly to 91 units in Q2 2026. This suggests a recovery in demand for ASML's core lithography equipment, which is expected to positively impact future revenue growth. Through this data, we can confirm that ASML is achieving consistent revenue growth and improving profitability amidst a challenging market environment, with a particularly strong increase in sales of its core products. This slide details the quarterly changes in cash and cash equivalents. Starting with €9,098 million in Q2 2025, net cash provided by operating activities was €748 million. Net cash used in investing activities was €428 million, and net cash used in financing activities was €2,164 million. The effect of changes in exchange rates on cash resulted in a net outflow of €11 million, leading to a net decrease in cash and cash equivalents of €1,855 million by the end of Q3 2025, bringing the total to €7,243 million. Including short-term investments, total liquid assets amounted to €7,248 million. In Q4 2025, a substantial net inflow from operating activities of €11,410 million led to a significant increase of €7,790 million, reaching a total of €13,322 million. However, in Q1 2026, net outflows from operating activities, €2,186 million, investing activities, €488 million, and financing activities, €2,275 million, resulted in a total decrease of €4,946 million, reducing the balance to €8,376 million. In Q2 2026, despite a net inflow from operating activities of €1,703 million, net outflows from investing and financing activities led to a further decrease of €1,299 million, ending the quarter at €7,582 million. This highlights the volatility in quarterly cash flow and demonstrates how investing and financing activities significantly impact cash holdings. This slide presents ASML's consolidated balance sheets on a quarterly basis from Q2 2025 to Q2 2026. Let's first examine the assets. Cash and cash equivalents and short-term investments increased slightly from €7,248 million in Q2 2025 to €7,582 million in Q2 2026. A notable increase is observed in accounts receivable and finance receivables, rising from €5,703 million in Q2 2025 to €7,813 million in Q2 2026. Inventories, net, also show a consistent upward trend, growing from €11,576 million in Q2 2025 to €11,740 million in Q2 2026. Among non-current assets, goodwill remained stable at €4,589 million from Q2 2025, with total assets increasing from €44,849 million in Q2 2025 to €50,215 million in Q2 2026. Moving on to liabilities and shareholders' equity, total liabilities increased from €27,431 million in Q2 2025 to €34,400 million in Q2 2026. Specifically, non-current liabilities decreased from €8,615 million in Q2 2025 to €6,235 million in Q2 2026, while current liabilities increased from €18,616 million to €22,155 million during the same period. Shareholders' equity has steadily grown from €17,618 million in Q2 2025 to €21,825 million in Q2 2026. Consequently, the sum of total liabilities and shareholders' equity, which equals total assets, also shows an increasing trend. These changes in assets, liabilities, and equity indicate the company's growth and its evolving financial structure.